Holy moly. Good morning, good morning, good morning, everybody. What a day. What a weekend, right? Um, Crazy news coming out all weekend long. This may be the biggest bank run of modern times. It's pretty crazy, and I think it's going to cause the Fed to pivot, and I doubt we see any more rate raises. I just don't think it's politically possible or smart to do. In fact, I think this is the fallout of the rate raises that the aggressive rate raising that they did with only one data point. Just looking at inflation and not really looking at everything else, the damage they were doing. I mean, one rate raise takes 12 to 18 months to trickle through the economy, and they did raised it basically 5 points. I mean, just shy of it anyway. It's just reckless behavior from people that think they know better. And remember, all trading involves substantial risk of loss. Past performance, not necessarily indicative of future results. This presentation here intended to be informational, educational, and fun. Especially fun. You should have fun. Hopefully this is a little bit of entertainment. And it's not a recommendation to go buy or sell anything out there, including my stuff. So if you desire personal financial advice, consult a financial advisor. Remember, I do live updates all day long. It was all weekend long on my Discord. If you want to find out how to get into that, check the description below. And make sure you're subscribed and hit the little bell with the things so that you get notifications when I'm going live again tomorrow. I got 2 shows tomorrow, one in the morning, one in the evening. So I'd love to have you there. Again, remember, you can use the chat, interact with me on YouTube, and I'll do my best to interact. I mean, what a day already. So futures coming right back down to where we found support back here in December. Looked like we were going to rally when the Fed and Treasury were announcing last night that they were going to back everybody for Silicon Valley Bank, and now we have 2 more banks that are kind of blowing up as we come into the morning here. As we get closer to the open, is this going to be an epic bank run? Now, the whole thing, if you don't understand money supply, only about 10 to 15% of the actual money exists in the system. Like if everybody goes to take it out at the same time, there's only about 10 to 15% of that real money in the system. Now, how is that so? How is that possible, right? Well, you take your money. Let's say the creation of the first $100. You take that $100, you go put it in a bank. That bank takes that $100, they put it on deposit, and then they take 90 of it and loan it out to the next guy. So the next guy has $90, and then he takes it and puts it in the bank, and then they take it, put it on the account. So now all of a sudden the bank has $190 on account, but they only have $100 on, and they roll this out until they get down to where they can only loan the $1. And this ends up being like there's only $100 was the only real money that was put in the bank. But they rolled it out until they have $1,000 in the bank. So that's where that 10 to 15% comes from. And sometimes it's a little higher, maybe 20, 25%. But in general, the whole economy, if you look at it, with all the debt and everything that's carried, probably only 10 to 15%. And talk about this in crypto, too. If everybody wanted to liquidate crypto at the same time, even though it's worth $1 trillion or 950 billion, whatever it is right in the moment, we could look it up. Right at $1 trillion. Only about 10% of that money's in there. If everybody wanted to liquidate their crypto right now, who's going to buy it? This is the whole point of a crash and a run. Like when everybody wants to get out at the same time, there's no buyers, and that's what causes prices to crush. So yeah, right now, crypto's moving up because where are you going to put your money? That's the big question right now. Where do you put your money? The 4 biggest banks have the most debt right now. They have the lowest security. Like JP Morgan, it leads the pack. So it's like, where are you going to go put your money at? It's a big question. So even if you were trying to get out of a regional bank today, where's the safe place to put your money? I think crypto is proving itself resilient in this, and that's why it's relatively flat. We had a little dip and we came right back. This was on the freak out that Circle, especially USDC, it's supposed to be a stable coin, and let's just kind of compare it here. This one came off the peg. It's supposed to be pegged at $1, came off the peg, ran down, and then came right back when the FDIC basically announced that they were going to make everybody whole. There's about $3.3 billion out of the $40 billion market cap of USDC that's tied up inside Silicon Valley Bank, or what's left of it anyway. So if we come over here, coin market cap, check out USDC, and we can see over the last, I have to look at a couple days here, you can see it came off the peg early Saturday morning, and then some chaos ensued, and now it's right back up to $1. So that was a little freak out. Like, people were concerned that USDC was going to blow up. Circle kind of backs it with Coinbase. It's like a partnership between Circle and Coinbase to back USDC, and well, they figured it out. This one didn't blow up like others did this summer, like Tether. So interesting stuff. Watching how crypto can kind of be secure. Now, the thing of it to me, it's like a central authority controls that, and when the central authority has trouble, that's what we see. It's not stable. Now, Bitcoin over here, we didn't see that same kind of big giant decline necessarily. We saw it on the banking freak out, but then it came right back up, and we're actually positive on Bitcoin here for the week. And this thing will still transact if all the banks burn down today. We can still transfer Bitcoins back and forth. It doesn't rely on anything but the internet. So, yeah. Some would argue it's the largest. It says second largest since, Washington Mutual, but this may be the largest bank failure, fastest. It's definitely the fastest, because $1 million a second was being taken out of Silicon Valley Bank on Friday for 10 hours straight. $1 million a second for over 10 hours. Think about that. I mean, how much money is that? That's a lot of money. So that was being withdrawn constantly for like 10 hours. And that's why the FDIC had to come in, because there just wasn't enough money sitting there. So back to what's moving today, right? So this chart, it's a little bit less informative than just simplifying it right here. We take it and we simplify it. This is the chart I've been showing since August on YouTube here. Right here's the support. We're probably going to come down, test the support from December, and then we'll see what happens. The Fed is definitely going to pivot. They're not, I don't see how they could justify any more rate raises anytime soon, especially if they're dealing with a bank crisis and a bank run. And they're having an emergency meeting at 11:30 this morning. So I think we'll hear some, if they don't step out with some unprecedented measures, then this thing could burn down. And that's why I've said be careful. If we get below this support, we can see a lower low. Been warning that seems like every live stream for weeks now. So watch out. If we start getting below these lows from right here in December or January, or early January, we get below those lows, this thing can make a lower low than we saw in October. Now, if we hold there and start rallying like crazy, 4,300 is the resistance above us. That's the parameters right now. All right. S5FI was down in the pits. Cancel. Go back. S5FI down here in the reversal zone. Now it can go lower. It can go down to 0 essentially, where no S&P 500 stocks are above the 50-day moving average, and we'll probably see a dip on further down today before we see a reversal take place. I mean, it just looks like that's the way this is going to shape up today. So be careful out there. This thing can turn on a dime. We've already tested support. This support box that I had on here, that really came from this range back here in November. All right. We bounce off of that and go higher. 4,300 is the top for now. NASDAQ still holding the orange box, amazingly, so far. That box has been very resilient for big tech. Russell pushed all the way back down. Looks like it made a nominal lower low. Reset the count here. That looks like a big wave too. We'll just have to see. I'll have to dive into Russell a little more and find out what's up. It looks like all those regional banks that are smaller are probably in the Russell, and that's the liquidation you're seeing, the money flowing out of that. Dollar, well, kind of predicted it was going to crush here. Already breaking the support there, down to the next level of support. We start breaking that, we're probably going back into the 90s on the dollar. Unfortunately, the stock market is not rallying as the dollar drops, though. What is rallying is gold. Gold is probably going to, here's one way to play it. I was talking about, I guess I put this out 2 weeks ago on the email newsletter, if you're on that. An aggressive entry above 170, 175. The resistance up to 178 on GLD. And it looks like we're at 170, almost 177 here before the open. And the target's up here at 185 and 190 for GLD as this rallies. I actually bought some right before the close on Friday. Looks like that's going to be positive. Looking for that run on up higher on gold. That was just the pattern. It was a bounce off the roadmap line. Classic stuff. It didn't rely on a banking freak out or anything like that. It just was the pattern. And it's kind of funny how the news and everything comes together to make this thing pop like crazy. So another big mover, FAZ. This is 3x bears on the banking system. Watch for this thing to go crazy. Another warning, CL breaking this wedge. We could see it come down here to the target zone in the mid 60s, even the low 60s. So watch for that to happen. This thing has been in this wedge, and if you take the initial size of the wedge, the initial move in the wedge, and you project it right off of where we are here, right in here, it throws it down to about 64 as the downside target on oil. All right, we get down to that zone. I'm going to be looking for a long because as soon as it reverses, this thing can rip to a new high since the 2020 bottom there, higher than was last year. So, all right, moving on here. Bitcoin, nice rip. This is a measured bounce setup. If you've taken my fib class, whatever. If you've taken the fib class that I have, this is the measured bounce setup. This was an Elliott wave 5-wave up, a 618 retrace. This is a wave 2. This thing, the wave 3, projects this thing on up. I need to draw a fib on here really quickly. The minimum target, 29,000. The probably more aggressive, realistic. I mean, if this is going to be bullish and support the halving event, somewhere around 34,000 right in here. 35 on the upside, 30, say 32, 31, 8 on the weak side, and 29 at the minimum, even if it's going to roll over again. So that's a big up on Bitcoin. Ethereum kind of has a similar but not the same pattern. So just beware. This one has a nested setup, and it's probably going to be limited to about $1,800 and $1,900 right in here before it does another pullback into the same area. So this one's going to have some chop before it goes higher. So don't think that Ethereum is the horse to bet on necessarily. Another mover, SGEN. This one on a buyout, right? is that the buyout news from Pfizer? So Pfizer's going to buy these guys out for their cancer drug treatment. Looks like a nice pop. Probably not tradable because buyouts aren't really tradable. They kind of come up here and park at the buyout price or just below it, and then slowly creep up into the buyout price as the deal gets firmed. So NRGD here. This is a 3x inverse leverage oil. Looks like getting a little pop today. This thing looks gnarly here. It's got some reverse splits. Always be careful on those. MRK, looks like the market's just opening here. And we got MRK getting a hit. And it looks like XLE also getting a hit down to the target zone. So lots of stuff moving already. Looks like PRVB. Look at that giant run from, looks like it was six-ish dollars on Friday up to 24 this morning. Probably on some kind of crazy something. Yeah, an acquire. Looks like they're getting acquired. ILMN. Nice little baby pop. It's got to get above the roadmap line to go higher. MSTR. Probably going to rally on Bitcoin rallying. Nice retrace. This is probably right at the 618 level. This can be a measured bounce if it takes off. CALT. Nice pop up there. No idea. Yeah. Drug trials. Pharmaceuticals. These things just going a wild hair. The pharmaceuticals, as I've said before, hard to predict the chart pattern. Looks like Bill came right down where I was expecting it to go. Can it get off the mat now? We'll see. That was, I drew that back here early February, and we got down there faster than I even thought it would go. The GDXU, this is a 3x leveraged ETN on miners. So remember, miners are not gold, and gold is not miners. So be careful when you play these. The miners don't have to move up when gold moves up. So this one is a mover this morning in the pre-market, or was in the pre-market. Now it's moving up a little bit here in the open market. ZROZ. Let's see, what is that? 25-year zero coupon Treasury index. Treasury's getting hit. So that one's popping. Stuck at the roadmap line though. All the things work the same way, kind of. UVIX. There's several of these like UVXY, UVIX, VXX. Lots of VIX plays. As the market has some chaos, these things will spike. They're all decaying assets, so be careful. The one that's not, SVXY, this one right here, puts would have been a smart play. Watch for it to find support and start ripping again. I might go long on this one once we kind of get a little bit of settling out in the market, because this one tends to rip and it doesn't decay. That's the interesting thing here. As the VIX goes down, this one goes up. And it just climbs and climbs and climbs. The only problem is when we get a VIX spike, this thing plummets like crazy. So that's the problem with short VIX. This is inverse VIX. Look at that Visa getting the pullback I was expecting right to the roadmap line. Another one moving. Ultra Pro short Russell. A lot of these things popping here. SRTY. FRC plummeting out. First Republic Bank, look at that. That's another one that may go out of business. Right there, First Republic. SoFi getting hit. That's bank technology, right? I do believe. And Western Alliance Bank getting hit. So a lot of banks getting hit like really badly. I mean, look at that. 65% down on First Republic, 75% down on Western Alliance. So be careful. Banks can get liquidated here. Yeah, a lot of banks in trouble. Even the big guys are not necessarily on solid ground here. So MS getting hit. I don't know what just happened. GS. Right down to the target on Goldman Sachs. I drew that back here. Probably in January, we got a little rally, came up to resistance, and right down to the target. So I didn't know we were going to have a banking freak out, but the target was right down here on Goldman Sachs. Morgan Stanley, yeah, JPM, BAC. Wow, what a dip. And come back down to these levels right around 24 on Bank of America. Let's see. So, yeah. Let's see. Arthur, SPXS. Nice little pop on that one. I don't know if we're going to see it rally much more. It could come up to this resistance here around 24.25. SPXL. Inverse play. Plummeting out down to 59. This one may find support again in here. Just be careful on these things. We can see a reversal very quickly on all this stuff. Cannot stress enough that this thing can turn in on a dime. So the time to buy gold was 2 weeks ago when I put out that alert. So sorry, Devin. Yeah. So anyway, anybody got a final question here before we wrap this up? I gotta go keep up with all the stream of news. Crazy day here. Am I biased long or biased short? I'm watching very carefully for a strong bounce. This thing is getting extreme on the I mean, this was an extreme move down in the markets. A relief rally bounce is highly likely, but we can break down support and keep going lower if you know, the Friday thing held true. We made a low on Friday. We see the lower low today, but this can be it. Everything can sunny, rosy pictures by tomorrow. So be careful out there. Remember, we have CPI, PPI coming up later this week, and an FOMC meeting next week, which I highly doubt they're going to raise rates. I mean, it's like political suicide if you try to raise rates in this environment right here, where you got banks blowing out like crazy left and right. So the play on gold right there, GLD, looking like it's going to hit 185, 190. And if it goes extremely crazy, we could see it even up here to 200. There's my GLD play right there. All right. Outlook for SPX. That's I kind of kicked that off at the beginning. Looking for it to hold support right here. If we don't hold support, we can see a lower low. Looking for it to hit that, find support right here and turn higher. And this can happen very, very, very quickly. So what about our local banks? Hey, right now, it's up to the government to try to protect it. So all these little banks can blow out. I mean, look at that. Regions. This is what, the 7th largest bank. Giant drop. Let's see. Trying to remember. Can't remember all their names. First Horizon. That was a local Tennessee bank. Look at that. From 25 down to 17. Right back where it was over here. I bet all these are like getting hit like crazy. Look at that. So this is definitely going to be a freak out today. I don't know what to say other than watch out. So where do you put your money? Like, the top 4 banks have the biggest debt load, the biggest unrealized losses. The Fed playbook is to invest your extra deposits in treasuries. Treasuries are getting hit. Today's the biggest down day in 2-year treasuries that we've seen since Black Monday in the 1980s. And that's where like banks are counting on that money being there from the treasuries, and the treasuries are dropping out. So this is just perpetuating the problems here. Yeah. So if you're scared about your money, I don't know. I don't have a good playbook what to tell you to do right now. I've got a lot of my money in the stock market. It has nothing to do with banks, but those banks that back all the brokerages could go out of business. Like everything's built on the banking industry. So the only place I've got money that I'm not too concerned about is in crypto. Funny enough, that's the whole premise behind crypto was that SunTrust went out. Like SunTrust is Truist now, right? Look at that. Even Truist getting smacked down. So and they're all getting hit. That one right there. So, all right, just be careful out there today. Try not to freak out. FAZ, this thing will reverse lower at some point here. FAS is the opposite one. That one's dropping like a rock. So be careful out there today. That's what I got. I'll be back on live tomorrow. And remember, if you're in Discord, live updates all day. If you want to get in Discord, check out the description below. Make sure you're subscribed. Hit the little bell with the things to make sure you get a notification when I go live tomorrow. And yeah, we can continue this conversation in Discord here. So, all right, everybody. I'm going to go see what everybody's got to say. I know the president's going on. The Fed's got a meeting, emergency meeting at 11:30. So lots of stuff going to happen this week. Be careful. Yeah, you can move money to your brokerage and wait it out, or you could move it over to a crypto account and wait it out. But that's the whole thing. Like if you go to a crypto brokerage and the crypto brokerage has trouble with their bank, then I mean it's like everything's based on the banking industry. Like this is like a serious issue right here. So even E-Trade, if you put it in E-Trade, that's what, Morgan Stanley? And if you go to TD Ameritrade, that's Schwab. Schwab's saying that 80% of their accounts are under the FDIC limits, but the FDIC only has $125 billion to backstop all this. And like I was talking about, this is like a multi-trillion-dollar problem. So this is going to be one of those financial history times where we see they're going to be writing about this for the next 50 years probably. The banking freak out of 2023. So you guys are living it. Like I said, we'll continue this conversation in Discord. If you want to come get in Discord, the link's in the description. It's like $5 or something. So, all right, everybody. I'll see you again tomorrow on the Morning Monster. What a day, right? Find out what happens. So, time's going to tell. All right, everybody. Be safe out there. Be careful.